Hi, everyone, and Happy New Year weekend to you. It is Wes with Pikes Peak Trades, and I've got a little bit of extra time in this extended holiday weekend, so I thought I would put out a video that I might title A Tale of Two Mice. It involves an analogy, a story of using mice and a mouse trap to help illustrate a trade entry method that corresponds really nicely with my Elliott Wave charting and channeling methods that I like to use for my trading. So we're going to use TDOC as an example. I like TDOC here because I can show you on the daily picture that TDOC is uptrending. Remember that I use my daily charts to just establish and confirm that stocks are in uptrends. Why would you buy a stock in a downtrend? You want to buy a stock in an uptrend. So TDOC put in a significant, I think, primary degree correction that culminated after the election in early November, then put in an intermediate leg up and an intermediate leg down. I believe that this heavy selling day coincided with Amazon announcing that it would be entering in some form way into the pharmaceutical or medical business, and that hit TDOC pretty hard. But remember, with Elliott Wave, you're looking for a nested set of ones and twos. So I started paying attention to TDOC after this move down. We got a minor degree move up and really started to pay attention right in here as it was working to establish this nested two low. So when TDOC showed that it could hold this 200-day simple moving average, that was when I start to look on the short-term chart. So my daily chart is for trend following and confirming. My short-term chart is actually for navigating my entries and exits. And as a swing trader, it would make sense that you would need to be using a shorter-term time frame for the decision making. And my choice is the 15-minute. Other traders like the 60, others like the 4-hour. I like the 15-minute because it helps me distinguish some of the subwaves that I like to use when tracking my Elliott Wave techniques. So here's that minor two low that you just saw on the daily chart. And what I really liked about that low was the divergence that was apparent between the December 28 and the December 28 low that happened intraday, and then the low that happened early on the 29th. And you can see that divergence here on the 15-minute MACD and RSI. Now, that's not apparent on the daily, but it doesn't have to be. Remember, this is you're just looking for divergence on a time interval for a swing trade, but I would like that for sealing that minor two low. Now, here's where the tale of two mice comes in. The first mouse takes the bait on this leg up. Okay, now for long stock holding, there's nothing wrong with that. But for swing trades, I'm trying to maximize the probability of my positioning for the biggest swing establishing move that I can find. And I've learned that you typically don't want to be the first mouse, because that first mouse takes that bait, and at some point the trap is set, and the trap is always the initiation wave top that then triggers the sell-off into the wave two low, which is exactly what we saw happen this week that ended the last week of trading in 2020 for TDOC. So wait for an established 5 waves up. Here it is on the subwave level. 1, 2, 3, 4, 5. Now, the danger is, of course, you don't know how far this wave can go. So it just involves some patience and some trust. There is always a retracement. Nothing ever goes straight up. There's always a chance to get back in. Then you wait for a move down. Now, this one is a little bit worrisome because it looks like 1, 2, 3, 4, 5 down. But that was enough for me to start thinking about being the second mouse. So the second mouse jumps in after the trap has set on the first mouse and takes the cheese. And the cheese being the bottom of the wave 2 low that sets a higher low against a divergent bottom, against a price projection that can now establish your risk reward. And this is the ideal way for you to use Elliott Wave. You have established risk versus this low. Clearly, that's now your stop. You have established reward based on that first mouse causing the trap to spring, and then using an Elliott Wave fin to project to here. And then based on how you might like to try to chart and channel, you can try to gauge a rough idea about when that would occur. Now, that's always just an estimate. But for swing trading, I do like playing front month or next month options. I was a little more aggressive here on TDOC and chose to buy January 15th, as I think those calls, if this really gets moving, could pay off over the course of, let's say, the next 5 to 8 trading days. So the tale of 2 mice. Don't be the first mouse. Wait for the pullback. Be the second mouse to get the cheese. It establishes your risk, it establishes your reward, and it puts you in a higher probability framework for an extended wave 3 move according to Elliott Wave.